Great and beautiful morning and evening to you all, wherever you are joining me at this hour. Welcome to 500th edition of InvestData Trading Academy live with Ambrose. Yes, I've said that the global market volatility has continued this 1 hour of the day, being another full trading week of the month of March. I'll tell you that most of the markets across the globe are missed right away. And it's a result of what market reacting to what different information coming from the different economy, or different nation. These are continuing to drive market, in a mixed direction. But the good news that we're seeing that most of the market are also, on a stronger footing, meaning that the fundamental of those markets are there, even as the fear of trade war, is changing sentiment in most of the market. I'll tell you that investors that understand the power of all this information are still positioning in those stocks that has what value, especially sector rotation has continued as most of the market have reviewed this hour. As we speak now, I want to look at how the market in Asia has opened. I will tell you that stocks and the market in Asia region or the Asia zone has opened in the green as we speak this hour or this Monday morning. Due to what? Due to expected improvement in Chinese economy after government has planned to what to boost spending in that region, and this has also, even with ongoing misfeeling of trade war, I'll tell you that those in China are expecting that the economy continue to look up in the face of what? In the face of Trump no trade war, and that has kind of boost sentiment in that market as we speak, or in that region as we speak. But if you look at other market that make up that region, I'll tell you that Japan index has moved up by 1.1% up in the green, as the Bank of England also is planning to keep rate unchanged this week meeting that coming up on Wednesday. That has supported that market. If you look at what's happening in Singapore's index has risen this morning by 0.7% in the green. And if you look to the world of South Korea, you can see that it has inched up higher by 1.4% on a bargain buying in the major technology stocks in that market as we speak. But if you look at India, index, I tell that India index is majorly flat, or I would say that it's mildly in positive. As mildly positive as investors are also looking at to see the consumer price index from that region today. Don't forget that India have been nursing a loss since towards the end of 2024. That loss position is still sustained, and that's why you can see that this morning you can see that that market is just opening mildly in uh, in India. But if you look at what is happening in Europe as we speak now, I'll tell you that Europe market has opened yes in green, but all eyes are on what? On the parliamentary voting for what? For Germany's what? Debt refund deal. That also have a way of going to impact the market positive or not. But good thing that I told you that earlier, that before now we've seen that the ECB has cut rate, and we expect that with this the debt debate also reform will be. And also there are also government, the new government in in Germany. I told you last week that they agreed to form a unity government, and also they're trying also to boost spending, and even also to provide more funds to make sure that that territory, that zone is also well protected. For me, it's a good one, and that can also change the sentiment there. And we're seeing market moving up, but the only caution we're seeing that is escalating is this trade war, that they also expected to see what Trump would will be doing to that region. Yes, they have seen steam and aluminum increase by 25%. Of how it's going to affect them. All these are things they are planning there, but I believe that the index in that region has opened in green. I said that the major index there are up. I've seen that some of them are climbing up, especially the the Pan Africa as a student has up by 1.1% in green. For me, it's a good one for them. And also, this stability we're seeing in Germany politics and also political activities also agree to go to form a deal that also that also boosts that economy, and investors are already paying attention to that happening in that zone, and that will change the Europe market. But if you move to US market as we speak now, I'll tell you that US market is still very flat, looking down because of what? Because of fear of this trade war, and not only that, fear of recession is already hitting US, because they are seeing growth already springing up in China. Why no fear of recession is gripping US economy and those that are in that environment, and that's why all eyes are still on what? On retail say data that will come this week also from there, and also expectation that this week where we are looking forward to see that the Fed will be meeting. Fed is likely not to great, but rather point out where the economy is going. These are the things that also we are seeing that position this morning. At the first trading day of the week, we are seeing that U.S. market is also sliding to the southward because of what fear and a weak expectation in terms of economic the health of the economy, and knowing that it is the largest economy in the world, that is also I've sent a signal. And also I've said earlier in this class that we are seeing funds leaving the US to other markets since this government came on board in January. You can see the country already in the third month of the year, towards the end of the first quarter, funds are continually leaving or left US market to others, especially other mature economy and also emerging economy where there are regional stability, and also the trade war is going to be an advantage for some economy and some domain, which I also mentioned in this class that we need to pay attention to all this because it has a way of shaping your decision as a trader investor. But the good thing is that in any market where you are, understanding what is happening in your territory is very, very important, but it will help you to make what informed investment decision. But even also, as also working that they are already planned that the EU also might likely also put kind of respond to what the US trade war or kind of tariff that is going up and down. But that also will be something that let's see how it's going to work, because that has also affecting the activities of US and Europe in terms of commerce, and also in terms of activities like but I believe that they have the way of mining it to correct all this. Also, as also threatened that they might likely also put a 200% tariff on also on US wine, on EU wine account and spirit. Why also EU also threatening that also they must also increase their own tariff for US also drink. These are the things that trade war will never eat something good. That's why even the global economy can see that even World Bank and also the World Trade Organization also they're also thinking of how this is going to affect the global economy. But yes, with the retail data being expected, let's see how it's going to play out in the market today. But I tell you that will also open the eyes of what the market to see where the economy, and also it will show also the health of what America consumption power right now. And that is why it's very, very important as all eyes are this on this world, you have a way of also giving a direction where the economy is going. If the economy rebounding, the sentiment still weak, all this will be reviewed by this data that the market is expected. Also has a way of also guiding the Fed in taking their decision. If you come to Africa, I'll tell you that Africa market is purely missed right away. And look at NGS. NGS is extending the kind of a pullback that we saw on Friday also at this hour in Nigeria market. And even as all eyes are still on more earnings to be in the market, this week or next week, we see that the NGS is still trending or is still trending startward as we speak. But before we go looking at our topic today, looking at we want to look at what is the market data right now. That will give us insight of what to do before we go to the topic for today. But if you look at the market data right away, I tell you that we're having a market that is already in red as shown with the chart, but market is pulling back already on the chart. But good thing is that when market pull back, good opportunity to buy. But what are you buying matters, and also how are you taking decision is very, very important. That's why I'll tell you that in any market, you must effectively combine your fundamental and your technical analysis to take what informs you. Especially when see market pulling back, you have to find out why the reason is market pulling back. On individual stock, it's also pulling back. It's very, very important that we know that. But as we speak now, the market data is reading 105,833.64. Indicating that the market is down by 162.3 basic point, representing 0.15, which is also 0.25 approximately. This is the state of the market right now. But the good thing is that yes, even we're having a negative market breadth of 19 losers and also 16 gainers as we speak now. But I tell that the market has the opportunity also to make decision what to do by looking at these figures that I just mentioned. As we speak, that is another thing that we should pay attention to. That we're having a 16 gainers and the 12 losers as we speak now. That means market still in a mixed market, having more buyers in the market and losers as we speak right away. But if you look at the top gainers right now, I can tell you that academic press is leading with 9.2% up, trading at 2 naira 88 kobo, followed by Nimet, pharmacy is also up by 8.43%. You can see that Eliza rebounding after Friday profit taking, now above 3 naira 9 kobo, 5.5% in the green, followed by Dangote Sugar that was also hit last week Friday it's also rebounded marginally. We know to trade at 36 naira 70 kobo, up by what? Up by 4.7% in the grade. Yes, Veritas Capital is also on the gainer chart, but the gain is not too strong. 4.55%, trading at 1 naira 15 kobo, and University Press Insurance, Universal Insurance, no sorry, Universal Insurance also in the green, trading about 62 kobo, 3.3% up. But if you look at on the flip side, that those stocks that are also in green, you need to pay attention to them. Sorry, those are in red right now. I'll tell you that Royal Exchange is reading the flip side down by 9.1% in the red, trading at 80 kobo, followed by Conhol PLC down by 7.95, 3 naira 36 kobo. I see FGN Cocoa down by 7%, 1 naira 72 kobo, and International Brewery down also trading at 5 naira 12 kobo, down by 6.91%. These are the losers. You can see also NSL Tech also in the red. These are the top 5 losers and gainers, as to speak, in the market. Yes, quick one before we go into looking at our performance at the chart today, our topic today. I'll tell you that yes, market is looking forward to see more trigger as it's pulling back, and I'll tell you that those trigger will be more for the earnings that will come from what the financial sector and other. As we speak now, I believe that the service sector, both the financial service sector, also can see that the aviation sector was expected to see the better results. That also in agricultural sector. But for sector, we see that index is already pulling back in oil and gas sector. But I say there's already also a sign of rebound in insurance index. That also tells you that the market is also heading somewhere as to speak. That means you don't need to panic in the market. Rather, you have to position for what is expected to happen, especially as more numbers are in the market, and these numbers beat expectation. That's why every investment sector in the future, the parameters, you must pay attention to what is happening in the market as we speak now. Yes, back to our topic for today. We're looking at taking advantage of trend and to better bigger trend and faster trend. And how do you trade trend is very, very important. I'll tell you that trading with trend is just trading with what with market flow. And market flow is about what demand and supply. That means if you want to trade with trend or you want to follow trend, you must also follow what the market flow. And that market is what your demand. That's why your volume is very, very important when you want to work to trade trend in any market you are in, because that trend will help you to see where the market is heading to, and it will help you also to make information where you are to hold the market or to know, because how to identify this trend is very, very important. Because as you identify a trend and you see a fast moving and a bigger trend, that is very, very important, that you must know how to identify it. And how to identify that, as mentioned when I said, well, you must follow what demand and supply, and that also reflects on your volume. You want to see whether a buy volume or sell volume. But when index or price action is above the T line, which I want to do us here so that you will understand why I always call this T line. T line, you can use either simple moving average, but for us in InvestData, we use T line because they serve a lot of things. You can also serve the same thing if you are using simple moving average and all that. But we want to use the one that we use here in InvestData. Let's go and see all those indicators that will help us to take decision. Let's call our 8 days moving average here, because before I continue with the discussion on how to identify trend that will move faster and bigger, you need to understand this, because once you have it at the back of your mind and you apply it in your trading, so when you're taking decision, you are going to go a long way to help you make more money or enter the right trend. That movement of price, that's what make money for us. I mean, if you are buying at the right time and following the trend that is trending and up, and we're able to enter at the right price and exit, not being carried away with either the market sentiment or we are following bad wagon, I'll tell you, you make the right decision at the right time. Yes, like usually I don't write my chart with the indicators, but if you are going to do it for this class, it is one I've just showed here. You can see the T line here. Like I said, that when index and price action is above the T line or moving average, the T line is moving up. You see that the T line is moving up. It also signals a strong trend with prices or index rising faster. And you can see at this point, when you see that the T line is moving up and the index action is leading as it's going, you can see that it's going up. But when it starts coming down, it also gives a signal. But when you see that the price and index action is rising with the T line, that it's moving faster. That's why you want to understand that faster. I put there so that it's very clear for you. I say when index and the price action is above the T line or moving average, one we are using, and the T line is moving up, it signal a strong trend with prices and index rising faster. It tells you that price of that stock movement. Then you now look at what is the volume supporting that movement. If you see a volume that is improving on a daily basis, and you see that volume is a buy volume, it gives you confidence that this trend that's going up is a faster one, and you must have it at the back of your mind. That's why you must not just ignore what is happening in the market. Even when a company has fundamental, you must check what is the market sentiment, what is the perception of the market, for that stock that has good fundamental, because that perception or that particular will tell you if there's a positive investors sentiment or not. Also, what is the psychology of the people in the market towards the company, towards the same stock we are entering, towards the market. You will know, because liquidity is very key. That's why I said at the beginning that we are following what the market flow, which are what or demand and supply. If there is supply in a stock that there is no buyer, they are bound to be what the price going down. But if there is demand, supply that low, price are going to go up. And you can see if prices are going up on a high demand and volume is coming out and market is beginning, that says that market or that stock is on the fast lane. You must also pay attention to that. And also don't be carried because the stock's on the fast lane. You must know when also to take profit from that. That's why a successful trader or a trader that want to make money in the market must have his buy, entering, stop loss and what and profit target. That will help to know exactly what you are doing. You don't just buy a stock and be waiting until it goes up. No, something has to tell you that this stock has got to the level, the fuel that brought it there or the momentum that brought that stock where is already steaming out. You need to take your profit and go. For example, if you watch this trend here, you can see that when the index move above the T line, it remains in T line up, and the T line has remained what as a support level as we speak. But they get a level that the energy that brought the market to this level will start losing steam. Before you know it now, it start coming down. But at this point, I start coming down, I can see that the money flow is looking up, but it gets a level that wants to start coming down. Even when you see that at this point it's still up, and the money flow is still reading up. But when it starts going down at this point again, the money flow has started coming down. Even when again for 2 days here, so that means you must see where the momentum has started slowing down. That will help you to know that the market is going that way. And before you know that the market started coming down, and the index break down the T line. That tells you that the market is weak, and you can see that the money flow was coming down. I can also look at your MACD, which is your momentum indicator. That it was the blue ones above the red one, but immediately they start coming, like I said, the red one now come down. That's a sign of brain. You can see it here that the histogram here shows us that yes, the bear was in charge at this period. The market was pulling down, and before it started coming up again to cross the signal line to become, and that you see another uptrend. That's that speed that it moved here. That momentum, it was not the same thing that you are seeing here, even when it pick up. Yes, it was going up, but not the same momentum. For how long did it go? It gets to a level again, it got tired again, start coming down. Before we now see the final pullback that market now become weak, seeing that the trend line is above the T line. These are the things that we should pay attention to anytime we are in the market. It's very, very important for us to know that. That's why I said know the different market space we are. That different market phase is very, very important. You can see that at this point there's some of accumulation, but this is a mark-up phase. I will tell you, as we speak now, market have seen a ton of distribution at this point before it went up again, before it finally enter a decline phase. We are seeing a decline phase, and we are seeing the pullback. We can call it correction or pullback or decline phase. I'll tell you that at this point, see accumulation here. You can see also accumulation at this level before a breakout. Now that the market at this point tried to accumulate before it went up, before you know it, we saw that market. But within this period from here to here was what we call distribution phase, because market is trying to find a direction. But here, the speed the market was coming has also weakened before it starts seeing a pullback and here. But the beauty of that, no market remain up or no market remain down. Market pulling back is opportunity for it to buy, especially at the peak of any season. You need to also pay attention to what the market is doing. That's why I said knowing the different market phases is very, 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 very important, because the general market direction matters a lot in following trend or in reading the market. Any market anywhere in the world comes in different ways, and that in that different way you cannot see one thing in the market, and this thing you can see is what either you see that the market is up, market is going down, or market is what is making a sideways movement. That's the thing that you must pay attention to it. And good thing is that we have market that have rallied after rally, and that trend will be up. What when I now see what we call a range market, After you might now see what called a sell-off market. That sell-off market, which is also a downtrend. That's a great opportunity. Consider recent days. If you listen to many analysts, when they say that market sell off, they sell off the profit taking and market people are pulling out money. The beauty that this money is not going out attractively out to the market. They're also looking at other positions, other stocks that are yet to rise. Why that the market in form of start trending before you know it, but still weak because it's trading well below the T line. But once market cross this T line, that will not confirm an up market. You must pay attention to what to your chart. It's very, very important in any market where you are playing reward. Pay attention to what to your chart, and that chart will give you insight to what the market is also doing, because the psychology of people in the market is very, very important. Yes, before we call it a day, we quickly let's look at all those stocks that was seen as the top gainers and losers before now. What is the momentum behind them? Are they trends that's also signaling us that the market is about to return up? Yes, but I said it earlier here that if you are watching this trend, you saw like about saturating trend here, market move, but that means between this range and this year, that's where the market was. Market is below the T line. That shows sign of weakness. Also, if you look at other indicators, look at your money flow. Your money flow is below what 20. And around that means this is what we call oversold region. Then that fund is not in the market, but you need to know that funds can't in the market start over. And when fund move above 50, so that's why those that that always ask questions about the sentiment report, you must pay attention to it. It tells you that when liquidity is in the market, or when liquidity is in the market, you see that stocks are having 100% sell. Or the index having 100% sell. On sell pressure, you should know what it is first in the market. But I believe that as we are seeing fundamental in the market, in the economy changing, we expect to see fund coming back to the market. That's why you must pay attention to where fund is going to go. If you also look at your chart here, you can see that MACD is already bearish. You can see that it's a bearish market because the red line is above the blue one. It's a sign that market is that is on a daily chart. You can quickly also look at what on the 1 hour chart for the market. If not on 1 hour chart, there's a sign here of market return to resist decline. But money is telling us on the 1 hour chart, fund is still going down. The market heading to 20 round down to 10, and MACD is not there here on there in terms of say that there is strength or not in the market right now. I'll say that actually the market is weak. We need to also watch this at a short or at a short time frame, 1 hour. Can people also look at say let's check let's look at 15 minutes time frame. The same thing you can see it here, the market below the T line. Look at what money flow is doing. But if you want to say finally look at what is the 2 hours doing. If on 1 hour the market is weak, you can see the same trend. The market is generally weak and speaking at this hour. We need to see this number that would give a trigger to the market, either in the up direction or in that direction. We must pay attention to this as a trader or investor. The people want to look at those stocks that are top in the market right now. As we mentioned, let's start from Dangote Sugar. What is the position of that stock right away? That also go a long way to tell us what to do as a trader or investor in this market. Because if you want to position and you know what we are doing, it helps you to know exactly what next to do. If you look at Dangote Sugar right now, I think that is the major stock I see, and the tactilizer I want to look at them. This on 2 hours chart for Dangote, you can see that it tried to move above the T line. You can see it here to this thing I was in here. For money flow is shooting 51, even looking down. For MACD, I'll tell you now, MACD is also telling a sign of what sign of bearishness also on it on the 2 hours chart. But quickly look at what is 1 hour chart saying on this stock. You can also see 1 hour make it clear. I can see try to cross the T line, but say a money flow, say that fund is entering gradually. But this T line, this blue line, cross this T red one up. So this called signal line in MACD. Once this histogram cross the other side, that's a sign. And this of 1 hour chart was saying, but good one for the stock. As top eyes are saying on what the company will do in terms of their merger. Are they going to await their merger plan, or they want to keep it lying asleep? But once that news comes to the market, I would like to support the news is what everyone in the market is looking at, seeing what is happening in the industry of what consolidation process that is taking. And also after Boa Food have doing a benchmark of almost 400 naira, while others that have started before Boa Food came to market are selling far below that. That is what is triggering kind of bringing this consolidation in the industry, and also try to put things together, and that is going to happen. Already we have seen it in Flour Mill and Dangote Group will not be different. Same thing will not be different. We expect that. But let's also look at what is happening in Tantalizer also. Well, let me Tantalizer. Yes, I know that yes, we have taken profit that stock, but that let's take what is happening Tantalizer also at this point. So it will help us also to make decision. Are you holding? You need to ask yourself. Do you want also to jump out? I'll tell you that there's still, if you're a long-term investor in the company, you don't need to also rush out. No. can still want to see their Q1 number to see where it's going. But you can see on 1 hour chart that the stock is still trying to break out the T line. You can see that profit taking brought it down. You can see, but I see that stock also going for this 1 hour chart we are looking at here. You can see that if you look at the day chart, you can see it here. Pullback of Friday was still above the T line on daily chart. But if you look at 1 hour chart, which I showed before, you can see that 1 hour chart, the stock is also trying to break out the T line. You know, for like 3 hours, the market, we can see it now that gone up for me. Want to keep our eyes there. That touch as high as 3 naira 9 kobo today, but staying flat now at 3 naira or 304 as we speak. But money flow try to come up on a 1 hour chart, but MACD is still what is still bearish on the stock. But finally, look at the comfort, you know, on the loser chart. Let's say it's an opportunity for you to buy comfort now. The chart will tell us so that you know exactly what to do if you are that stock or you are yet to enter. Looking at Convol on a 1 hour chart, you can see that the stock was in a kind of a strong volume here, but money flow is looking down seriously. But MACD is also trying to, you know, give us a sign of bullishness. You need to watch it here. If we cross this one cross up here, continue. But I see that the blue one is also looking down. Let's look at the 15-minute chart for this chart, this stock before we go to what on 15 chart. You can see that it's below the T line. On 15-minute chart, you can see. But once that money flow is also below, this is for me, this is something I should pay attention. It's already at oversold region, and I was saying that once MACD, this blue line is able to cross this one up, that's a good sign. But let's quickly look at it also. I've checked 1 hour chart for this stock. Let me quickly look at it because my time is fast spent already signed. I'm giving me a sign here to call it a day. But I want to quickly go up to the 1 hour. Let me quickly look at 2 hours chart so that we can see it together. And also before I call it a day. On 2 hours chart, you can see that the same thing below the T line, but try to resist the decline with the candlestick formation we're seeing here, pulling back here. But you can see, let's see how it goes on 2 hours bars. It's not looking back, but money flow is reading 31, which is also down. But let's cross Africa. But this low price for me is an entry point for those that are looking to take advantage of the pullback in price, because this is strong support level here, which has gone below. It can see the strong support level around 30, around 340, 345. But now you are seeing it around what's it now? Really 320, 330. For me, it's a good one for you to pay to jump into the stock, depending on your investment objective. On this note, I will say thank you. And for those that have sent their payment link this morning, and also those that are also asking for the date for the expiring of the window for discount. Yes, it will expire by Saturday, hopefully by progress this week. And those that are taking advantage of it, thank you and respect. But I believe that you have to take advantage of the observation we're expected to see in the second half of the year. How can you navigate it and be in profit? Because the first quarter of the year is already coming an end as we enter the last week of the month or the quarter next week, hopefully by progress. On this note, I'll say see you on Wednesday. Enjoy the rest of your trading day. Bye.